a commodity channel index trader is revealing a typical CCI trading error. A commodity channel index trader is revealing a typical CCI trading error. All right, so one of the technical indicators that traders are misusing is the commodity channel index indicator. In this tutorial, I would like to reveal to traders a typical CCI trading error. All right. The stock that we are looking at is Mondelez International Epic Mike Delta Lima Zulu MDL Z, listed on the Nasdaq 100. We are on a quarterly chart, and I want to highlight for traders, okay, a typical CCI trading error. The CCI stands for the Commodity Channel Index. Okay. So here we have. Pay attention carefully because it's a short video, okay, to reveal to traders a typical CCI trading error. So here the CCI period 14 becomes overbought for the first time here, where I place this vertical line, okay. So a common trading error, a common CCI trading error, traders will look for opportunity, will sell straight away. All right, so here it is. It crosses above the level of 100, which is the horizontal line here, period, CCI period 14, and trader will sell straight away here. Okay, it's not to buy. You can see that it's not to buy after this quarterly candle is closed. All right, and you see price went down, okay, for 2 quarters, and then went back up before coming down. This is not a bad decision, isn't it? It worked beautiful, isn't it? It worked nicely this time. So we want to check why it works, okay? So what we say to traders is that when the CCI becomes overbought, the first thing that should come into our mind is what? Resistance level, okay? It is a trading setup. It's not a trading signal. We'll use a top-down trading method, all right? The best market patterns for trading the overbought CCI are the declining channel and the horizontal channel. So here you can see that price went down, display this low here, and then went back up, display a lower high. Okay, but now you see here it display a higher low before the CCI became overbought. So pay attention. In a downtrend, we are paying attention to the new low. So if there was a low here before, we want to see a new lower low, okay? A new low, a lower low, okay? If the price failed to display a new lower low in a downtrend, it's alerting us that the bearish momentum is diminishing. So here, price went down, displayed this low, so this is our first low here, okay? Price formed a lower high, which is normal in a downtrend. But as we are expecting a lower low, we have a higher low, okay? All right? So we start wondering, what kind of downtrend is this? So at this point in time, if this trend line here along this price that went down here is kaput, we will say that, okay, there's a high chance that the price will go back up because the price has failed to display a new lower low after a lower high. So this is a typical reversal pattern. We'll use a top-down trading method to buy here because the price has failed to display a new lower low. Top-down trading method. Price went up. Now the CCI is overbought for the first time here. Now it is a bit crazy to sell straight away because of the higher low. Yes or no? We have the notification for the price that the bearish momentum is diminishing, but okay, CCI becomes overbought for the first time here. It is crazy to sell straight away. As I say to traders, when the CCI becomes overbought, it's a trading setup. It is about looking for an opportunity to sell. If there is an opportunity to sell using a top-down trading method. So traders that are using a top-down trading method will navigate with trades, okay, easily, okay? Set up validation of the trading setup, signal, and a low risk entry point. Or if one does not want to use a top-down trading method, one can use a call option or put option, okay, to stay in the market, okay. The most important thing is to control the risk. So it was not a bad place. So CCI is overbought. First thing coming to our mind is the resistance level. So because it becomes overbought for the first time, right here, this is this candle here. Okay, we'll draw the warning line. This is my warning line here. On top of that, candle must close. Because I'm on a quarterly chart, the candle that brought the CCI above the level 100 for the first time must close. If I'm on the hourly chart, that candle must close. If I'm on a daily chart, that daily candle must close. It's critical. So this is my warning line after these candles close on the quarterly chart. What we are discussing here is valid on all time frame. So this is our warning line, okay? So I will say to myself, priority to start signal below the warning line because my CCI is overbought, highlighting a resistance level, okay? Priority bullish signal above, all right? If it breaks above, pull back and validate the warning line as a support level, we will buy instead. But here, you see stay below it, and okay, slowly, so you see it went down first and then retest it again. And you see this, there is a beautiful candlestick pattern here, you see here. All right, the doji followed by a bearish candle. A doji and a bearish candle at a resistance level, and now traders start selling. Here I will sell this candle, the doji and the bearish candlestick pattern. I will look for opportunity to sell from here. But there is a better place to sell for this trade setup. This is what I want to show you now. All right. Going to remove, pay attention carefully, okay? So paying attention to the price itself, we can draw a line like this. You see this low here. A low, pay attention, okay? Color it also into orange, so this low and this low here, see? All right? So this is a trend line here. You can see that the price D below it closed bearishly. Here, this candle here. All right, D below it, closed below the second orange line. Now you can see when this candle opened here, it went back up to retest the orange line before traders sold it down. By that time, the price reached the lower part of the blue channel. The blue channel here. So if you was change my time frame to monthly chart, probably you'll see clearly there. The second line, here it is. This is my second orange line here on my chart. Price close below it, okay, and try to retest it here. A better, safer place to sell. Because there's support here, this support here. Price went below it, and turn around, retest it, and then trader use a top-down trading method to sell it down. Stay with me. There are more to this. I want you to see this clearly, okay? Stay with me, please. I haven't finished yet. All right. Some traders, so CCI becomes overbought here for the first time. Let's remove this orange line. All right. So now, price is going up, isn't it? So it's going up before. So it was going up. It was going up, okay? Now we see it crosses above the level 100 for the first time. We draw a warning line, okay? So you see that the price, the trend line here. Now I'm drawing another line. This time I'll color it into pink so you don't get confused. We're on a quarterly chart. So here you see the pink line. Price was going up, nicely touching the pink line. Now the CCI becomes overbought. Pay attention to the vertical line. You see now? Now, here it is, price D below the pink line, because the pink line is also a support level. Price going up, going up, going up, okay? Now, it D below the pink line, and retest it here. So, it break below the pink line, and retest it here. That's why trader after this candle is closed, we will use a top-down trading method to sell it. Because the price violates, okay, a bullish trend line and turn around and retest it here. Now, by using a top-down trading method, we can trade this carefully, okay? Instead of just selling it straight away, we use a top-down trading method. So we will say at this point in time, it's a bearish trade setup, there's a high chance the price will find a resistance there and come down. By using a top-down trading method, we can control the risk instead of just selling it and the next day see the price going up on the edge of the trend line. It makes sense? All right? So though the CCI is overbought since this candle here, you see how many times, how long traders were waiting before they sold it here. The CCI was overbought for the first time here, but this is where still traders sold it after this candle is closed. By that time, the CCI did below the zero line. But traders that are trading the CCI instead of the price will sell after this candle is closed. These are crazy traders. Here, they survive and it worked beautifully. Sometimes they may not. So stay with me as revealing to you a typical CCI trading error. You can see that they have survived. These traders that are selling because of the CCI have survived it. But the best place smart traders will sell is here, or the one that I've already shown you, the second orange line on the edge. Here, warning and the signal and the setup, right here on the edge of the peak line right here. The warning is given by the technical indicator here, the violation of the trend line, and the confirmation of the trend line as a resistance level, and use a top-down trading method. You can apply the same method, daily chart, hourly chart, 10-minute time frame. All right, it makes sense? So let's pay attention to the second overbought here when the CCI becomes overbought for the second time. So you can see that traders that are trading in the CCI make money. Traders that are smart also make money. Let's see here. CCI becomes overbought for the first time. Here, where is the candle? This one. Pay attention to my vertical line. So I'm moving my vertical line, my warning line above the high of that candle. And we want to see whether this time traders that are selling because of the CCI, have survived or not. Okay, so here it is. This is the candle. You want me to highlight for you? Okay, let's do something here. So this is the candle, okay? Pay attention to the arrow there. That's the candle that brought the CCI for the first time above, the level of 100. Here it is, this candle here. Okay, let's zoom into it a bit, okay? So traders that are trading the CCI will sell straight away and forget. Now, if they sold it, you can see that the following quarter, the price went down a bit. That's 3 months. So probably they make some money and they took profit, which is great. But suppose they did not take money, they did not take profit, they are using, put option, and they are waiting for the expiration date before they take their money out of the market. And you see, finally, the price resume to continue to go up, okay? This is a typical CCI trading error. Why, okay? I want to show you something, okay? Pay attention carefully. I want to remove some line. I will speak slowly so you get the attention. Remember, if the price is going down, our attention is on what? The lows, a new lower lows, a new lower low, okay? But if the price is going down and it formed a new lower low, and suddenly the price went back above the previous low. So you see here, there was, don't get confused, okay? Don't get confused. So there was this low here, okay? And now we have a new low here, okay? So we will say that the bearish momentum is healthy because we have, a low and a lower low. So we say, okay, bearish momentum is healthy, all right? But if the price goes back above the previous low, this is the previous low here. Okay, let's color it now into orange. But if we are in a downtrend and the price goes finds support above the previous low, it's also indicating to us that the bearish momentum is diminishing. I want you to remember that, and I want you to promise me to swear that you will never forget. No, don't swear, okay? All right? So don't forget it, okay? If the price is in a downtrend and price go back above the previous low, it's indicating to us that the bearish momentum is diminishing. It doesn't say that the bearish momentum has finished. It's a warning that probably this bearish momentum is diminishing, all right? Doesn't mean it has ended, all right? But it's diminishing. It's getting a bit weak, all right? So we have this low, and then we have a new lower low, okay? But look, the price went back above the previous low. Here it is. But look, the CCI becomes overbought when the price itself is telling us that, okay, the bearish momentum is diminishing. So what do we need to do? Because now the price is telling us that bearish momentum is diminishing, CCI is telling us that the price is overbought. You see? So if you sell using the CCI alone, you can be in trouble. That's why traders that will remain in the trade for long here are in trouble when the price starts going up big time. The price is the #1 indicator. Here it gives us a warning. You see how the price break above the previous high? Here it is. It break above and retest on the quarterly chart. As this quarterly candle is closed, this one here, pay attention. This one breaks above the red line, which is the previous low. This one retests it. Now the confirmation has happened here that the red line is now a support level. Traders that are using a top-down trading method will trade it after this candle is closed. Attention to the vertical line. Break above, retest. Okay? Now, here it is. It went up. And here, the CCI for the first time becomes overbought for the first time. When the price is also breaking out above, my friend, pay attention, above, okay, the blue channel, the decline in blue channel, violation of market pattern. Breakout when the CCI is crossing above a bearish trend line, when the CCI is crossing above the level of 100 for the first time. Do not sell. If you want to sell, use a top-down trading method. You will see that very often what will happen here, because you're on the quarterly chart, you may see a signal that is formed, price going down, and then the signal will change. So you will say, okay, this is a bearish trade setup. Okay, then you use a top-down trading method, signal is fired. Okay, you enter, then you will see that the signal has changed. Signal change, come out. Here it is, it goes up. But if you are paying attention to the price, you will know that this is a risky selling place because the price went back above the previous high and found a support and also break above a declining channel. This is a typical CCI trading error. Do not sell this CCI. The reason why traders are selling here is because they sold it here, it works, and they want to sell again here, and it didn't work this time. They are gambling and they don't understand the price. Pay attention to the price itself. The market patterns and the language of the price will allow you, okay, to navigate through the market. In fact, what was happening here, these are area wave traders. So I'll refer traders back to 24areawave.com. All right. That's what I say to you. I recommend to all traders to learn about the area wave pattern. Okay. What we have here is a declining, okay, a descending triangle that is being formed here, okay? Area wave traders that are looking inside the price, we see that in fact we have what we call a descending triangle. You see the price went up first and then form a descending triangle. 1, 2, 3, 4, 5. All right, here it is. A, B, C, D, E. Chart pattern. 24areawave.com. It's a triangle. A, B, C, D, E. Area wave traders are buying here. All right, let's color into blue where the area wave traders are buying. Okay, right here. A descending triangle is completed. A continuation pattern. Traders will use a top-down trading method here because when we see a triangle, anything is possible. We'll use a top-down trading method. And for area wave traders that see this triangle, this overbought, he or she will look at it carefully and manage the risk. If you want to sell desperately, all right, you want to say priority to bearish signal below the warning line and bullish above. And finally, If you couldn't, if you don't know about A, B, C, D, E, you did not buy at the best place here. All right. There's another conservative place to buy here when the price breaks above the warning candlestick. So this is the warning candlestick bar on the quarterly chart. It breaks above the warning line. We wanted to retest it. Here it is. You see the bearish candle. You want to buy low. You want to sell low. You want to sell high, all right? You want to sell high. You want to buy low. So if you want to buy, we want to pull back. Don't chase it. Don't chase it. Like, so suppose you are here, you want to buy, okay? You want to see a bearish candle, okay? A pullback. So don't try to chase it, okay? Unless you are using a call option, well, it's up to you. If your option will not expire before that, okay? All right? So went up and pull back to retest it. Now we have a trading setup. We use a top-down trading method to trade it. This will allow us to control the trade. So here, this overbought CCI is not a sell signal. In fact, it's a breakout trading signal to buy. This is a typical CCI trading error. If you like this video, please give us the thumbs up. If you dislike it, please give us the turn down. If you love it, feel free to share it on Google+, on Twitter, and also on Facebook. Have any suggestion? Put it in the comment section, all right? And you have any question, put it in the comment section, and we will get back to you, okay? All right? All right? So to summarize this video, okay, one should not trade the CCI itself. One should acknowledge the warning given by the CCI, but one should concentrate on the price, paying attention to the price itself. In a downtrend, we are concentrating on the lows. But if the price fails to display a new lower low, it's a weakness of the downtrend. And also if the price returns back above the previous low, it's a weakness in a downtrend. Attention to the price, draw your channel. This will allow you to filter out false CCI signal, all right? So once again here, in an uptrend, we are paying attention to the high, price might display new higher high. So our attention on the high, new high high. But if the price, for instance, you see here, this is the first high, this is the second high, this is the third high. But if the price failed to display a new higher high in an uptrend, it's also indicating to us a weakness. But once again, if the price return back below the previous high, this is the latest high, this is the previous high, if the price come back below the previous high, is also a weakness in an uptrend. It makes sense? All right? I hope you have enjoyed this video, and we'll put it into use, okay, to make an excellent CCI trading decision and avoid typical CCI trading errors. Until the next time, enjoy yourself and be very happy. We are the CCI Pro traders talking about a commodity channel index trader is revealing a typical CCI trading error. Speak to you soon.